So we're gonna do a soft start in case some more folks trickle in, but we figure let's jump right into it. I'm Gabby Cantu. I am the program coordinator at the collaborative. I'm super happy that Barbara here is joining us. Barbara has been in the financial services business since 1978. She's an independent investment advisor with a certified financial planning designation. She works with individuals, small businesses, artists, self-employed professionals, and families, helping them create their financial roadmap, including areas of investments, taxes, estate planning, and retirement planning. So she's ready to help you with any questions that you might have about how to keep a sustainable arts practice. With that said, we have other workshops in the works and a few others that we've already done as part of our Assets for Arts program series. We are keeping in mind ways that we can support artists in our community to be more successful in their arts practice by taking on these skills-based workshops. Without further ado, I will let Barbara help you get acquainted into how we're going to structure this workshop.
Okay, so thank you. Nice to meet Lily and Quinn. Okay, I do talk a lot, and I have sort of a outline of the kinds of things that I will talk about. So feel free to interrupt me, or maybe what I'll do is I'll have each of you, since there's two of you, say what your interest in taking this class is, and then that will give me some parameters I can get directly to you, answer those questions directly. So if Lily, if you want to give me an idea why you decided to take the class.
Hi, Barbara. I'm so sorry I'm zooming in and kind of have the blank screen going, but I am very much present. I am just on a train home from Boston to Providence at the moment. So I am actually a current college student. I go to Berkeley. I'm studying music therapy and songwriting. And ideally, I'm probably going to go into like a research field related to music therapy. But I'm also really interested in performing arts, and I'm also a writer. So I'm definitely looking to learn more about how I can be like financially responsible, just as a musician, as a writer, and also just, also help my friends out too, because I have a lot of artist friends. So thank you so much for your resources. And I am very much present, although the blank screen may indicate otherwise. Thank you so much.
Great. Okay. Thank you. And Quinn?
Hi, can you hear me okay? Oh,
I'm sorry?
Nope.
Oh.
Can you hear me?
It's a little garbled. I don't know if you can use a mic.
Nope, I'm just going to switch it. I had some headphones on, and I'm just going to go ahead and take those off because they are not reliable.
Okay, now we hear you.
So I think you can probably hear me a little better, although I can't hear you, but that's not important right this minute. So my name is Quinn. I am sometimes working on, I should say, but it's kind of like a side hustle. So I'm trying to figure out fiscally what is best. Like, do I start an LLC? Do I start separating the money that I have? I think that would be smart, but kind of unsure how that works with maybe starting my own business officially.
Okay.
Taxes and writing things off and all of that, as well as kind of like making sure my prices are somewhere livable, that kind of range. So pretty much all of the things, anything would be helpful.
Okay.
And like Lily, I am on the board for a Pawtucket theater, so it's nice to know little things here and there that might be able to help other people out, especially with the finances and the arts. Yeah, so just looking for any help, especially when it comes to usually tax season. I get a little scared.
Everybody does.
How that might work.
Okay. Okay, great. Thank you. Thank you both for that. I like to make sure that I keep things simple in the financial arena. We use incredible jargon and words that nobody understands, but so I don't like to do that. So I like to start with talking about pretty much the basics and the things that are specific for artists are a little bit different, because actually there are artists areas and Pawtucket is one of them, Rhode Island, where you can have a studio and you don't have to pay taxes to the town. So business taxes, really, property taxes. So anyway, so we'll talk a little bit about that, and we'll talk about taxes as well. So basically, I'll talk about finances in general, basic terms, record keeping, what a budget is, how to keep track maybe of your sales and your expenses, and we'll talk about what's included in income and expenses for that scary tax person. Self-employment which is a question that you've had. You can be you can do an LLC, but you don't have to incorporate, and that's a special use unknown or I forget what it's called, but and that's usually the best way to start, and you can get a tax ID number if you want. I have clients who have they sell their artwork through professionals. They have and they do it themselves. So it's there's all sorts of ways to go through that, but we'll talk about that. Talk about what investing is, retirement. I don't know how old you are, but the earlier you start saving for retirement, the better you will be in the future. So that's a really important thing to think about as well. And when you're self-employed, you have some special things that you need to do or that you can do in order to put money away. So, okay. So I'll start with basic terms. When we talk about investing, we generally talk about stocks, bonds, certificates of deposit, which are sold through banks and brokerage firms. Investing now has changed a lot in all of the years that I've been in the markets or in the business, because we have things like Bitcoin, virtual currencies, I should say, that are now actually on the tax form. So that's a new thing since 2019. We have, you can do online trading, online investing, you can do online banking. All of this, we used to have to go to the bank and get money out of the bank. And now I believe my bank now, I can just use my phone as well to get cash out of the ATM. So all of that is a huge change. Hardly anybody uses checks, and that used to be like a standard. So so things have changed a lot, which also means that they have gotten, I don't want to say more complicated, but perhaps, whoops, I'm sorry, I don't want that. Okay, go away. They've gotten more complicated and, oops, no. I don't know what I've done here. I've put something on here that I don't want. Okay. So okay, so basics. Basic investing. When you put money away, whether you put it in a bank or you decide you want to buy stock, you have to invest it. So you have to do that through somebody. You can do it through Fidelity. You can go online and open up an online account. What they do is they do a background check. They need your identification because they have to identify who you are and check you. So your social security number, name and address, your street address, and they'll always do a background check. A lot of what's happened with the internet is that you have to be really careful because there is an incredible amount of theft and cyber stealing and danger to investors. So you have to have security on your computers and in your bank accounts. And a lot of it now is seems to be two-form identification or second identifying you by the use of a code, which is a good thing. So if you're doing all of that online, make sure that you're also protecting yourself from theft, because it's become a huge thing, and it's not just local, it's international as well. So okay. So investing through a stock, when you own a stock, it's you own a piece of a company. And if you own a share of Microsoft, which just made a new high, you now own an actual share in a company. You get to vote that share you vote for board of directors, you vote for a company, you vote, there are shareholder, sometimes there are shareholder announcements, like I don't know, they'll submit a thing to the board of directors meeting for limiting the amount that the executives can make, or higher than the lowest paid person in the company. But those don't happen very often. But anyway, okay, so you actually are a shareholder in a company when you own a share of public stock. You buy stock because you think that the company's going to do well. Artificial intelligence is really exciting now. It's a growing industry. It's all around us and it's been exploding, but you might want to invest, and that's one of the reasons Microsoft is doing so well. Google, Amazon, they're all investing in artificial intelligence and AI, and there are companies that are actually doing that as well, so other companies. So electric vehicles, Ford, GM, of course, we all, well, we may not all, but we know about Tesla making electric cars. That too, anything that the future is happening is probably a good thing to invest in. There's risk in that, because when you buy a stock, and as I say, you own a share of the company, you're taking the risk. You buy it so that because you think it's going up. It can go down, and you can lose money as well. So that's basic on stock investment. When you invest in bonds, what you're doing is you're giving, whether it's a treasury bond or even a certificate of deposit, basically, which is at the bank, is like a bond, because the bank promises to give you an interest rate, say it's 4% now for a year. So you give them your money and they give you, say you give them $1,000 and they give you 4% on that money at the end of that year. So that you've actually loaned the bank money, and they're promising you an interest rate with a time period. That's basically what a bond is. And that goes everywhere. Corporations offer those. The US government offers bonds, treasury bonds, and corporations do as well. So you're giving that money. It's a little less risky only because if the corporation is of good quality, you know your chances of getting your money back are good. The return on bonds, when a corporation goes bankrupt, the first people to get their money are the vendors. So anybody that sold anything to that business. And then the second tier are the bondholders, because you've loaned the company money. And then last on the list are the public stockholders. They may not get anything if a company goes out of business. That's why, that's the risk. I'm just trying to describe the level of risk. So bonds are less risky than stocks. Interest rates right now are very high. If you have money sitting in a savings account, you don't need it, then you might want to, for 12 months or so, you might want to put it into a CD because it'll earn 4, maybe even 5% at this point. So it used to be earning about 1% or less than 1%. So interest rates have gone up. So for some people, that's not a bad thing. But for people buying houses or cars or equipment for their work, it might not be so good because they're paying a higher, or a house, they're paying a higher interest rate on that alone. Okay, questions? Either of you have a question specific? I hope I've been fairly clear. Okay. A lot of times we talk about a budget. Nobody likes a budget. It sounds scary. It's not easy to do because we think we have to write down every dollar that we spend. But a budget is basically your income minus your expenses. So if you bring in $1,000 a month, that's your income, and you spend $900 a month, that's your expenses. So you have $100 left over to put in savings or to put in your travel account or to do something else with, but you have $100 left over. A lot of times what we do is we bring in $3,000 and we spend $3,500. and it gets harder and harder with rents going up and the cost of everything going up and food going up, and our paychecks don't go up as fast. When you have your own business or you're selling your art, that is money that that might be extra, or it's critically important to keep track of your income and your expenses for that, because that's taxable. If I hear so many people say, well, I didn't sell $600 worth of anything, so I don't have to report it. But if you want to get the advantage of your expenses and deducting your expenses, then you should report that, and your expenses might be more than that, but you can deduct that from other income if you have it. So but in your business, if you're selling anything nowadays, if you sell through PayPal, I don't think Square is doing it. The government has changed the reporting. If you sell a large painting, say you sell something for $1,500 and you're in a gallery, and the gallery will send you a 1099 report, and that report on how much you sold that painting or a sculpture or the piece of artwork, that will be recorded by the government. That will go to the Internal Revenue Service. And if you don't report it within 3 years, they will write you a letter and say, how come you didn't report this income? You owe us taxes. We're going to penalize you for not reporting it. So it's very important to keep track of all of that. Lily, you mentioned that you're a college student and that you're going into music therapy. Well, if you're going to be a therapist, you might be working for yourself, and so you too would have your income and expenses if you have a studio for using your musical, for teaching music therapy. I assume that, and this is a big assumption on my part, music therapy would be, people would be doing musical things, right? With you, and you would be, that's how you would be approaching it. But anyway, so but you would be in business for yourself. So again, it's important to know and understand how that works. Okay, so when you're record keeping for your art business, we have what's called the government profit or loss from business is a form, it's a Schedule C. And I think that we have that. If Gabby can put that on the screen, I guess. Can we do that? Okay. All right, I don't know. I'm not sure I can do that, but okay. So anyway, so what that Schedule C is, that is the tax form that goes with your tax business, and it asks you, gives you all these expenses. It asks you your income. Sometimes your income won't be reported if you use an online service, and I'm pretty sure it's PayPal does it. I'm trying to think of the other one that I see a lot of. Anyway, Square, and they will report income by month to you, and it's also going to the government. So you have to report that in the income, and then the expenses that you can take off are things, advertising, insurance that you might pay on a studio or or wherever you have your or storage for your artworks, supplies, excuse me, the utilities that if you have a home office, you can also take things off for a home office expense, anything for the home office as well. So, and that's sort of.
Share
Go
the
ahead.
form really quickly, Barbara?
Pardon me? Yes, please.
Of course. I'm pulling it up now.
There it is. Okay, and you can see where all of that is gross receipts. And well, you wouldn't necessarily have returns or allowances. Cost of goods sold, if you have costs for paint and canvas or other equipment that you need to make your product or your artwork, that could all go in there. And then all of those things that are listed are expenses that you can then take off. If you're traveling to a show, or you go to a show in wherever, you would have travel expenses for your car and for driving, maybe shipping expenses for sending things out to people. And so then supplies, taxes and licenses, fees for doing a show, travel and meals. The travel would be any expenses for transportation and overnight, like hotels. And you can also take off expenses for education or research. If you're going somewhere to hear some music, that would be appropriate for your just for something new, for your therapy, for instance, you would be able to deduct that. So, and that's important because on any profits over 400, and that's net, that's income minus all these things that you can take off in expenses, your profit is down here, your net profit. And that net profit is taxable to you. And it is taxable. You also have to pay in to Social Security and Medicare, and that is called self-employment tax. So if anything over $400 net down on this line, you would have to pay 15% on taxes. So if you made $1,000 in your business, and no matter what else, whether other income you had, you would owe $150, which is the 15% as self-employment tax. You wouldn't owe any income tax. Well, you might owe income tax on that. That would also add. But if your whole business was $1,000 and that was your only income, then this is a big, that's not going to happen, right? Or even if it was $10,000. Okay, I'm going to use that. Let's say you just made $10,000 from your business in the year, and you didn't have any other income. So you would owe $1,500 in self-employment tax. You wouldn't owe any income tax because your deduction, if you're a single person, would be about $12,000. So that from that 10,000, it would be a negative for income tax, but you would still have to pay the into the self-employment tax. And the reason is when you get a paycheck, the company pays 7.5% to Social Security and Medicare for you, and you withholding from your paycheck is also 7.5%. So it equals that 15%. So you don't want to, you want to pay into the self-employment tax. So what I usually recommend for people who start to get checks for themselves is good record keeping, which means you keep a record of all the income from the business. I usually recommend that you open up a separate, maybe checking account, if it's a free checking account, and you put all of your deposits in that checking account, and then you also spend from that account for your expenses, so that your bank, if you have, and you can do it online, obviously, but you'll have a report at the end of the year that will give you your net, really, and it'll make it much easier to fill in your tax form. So that's usually what I recommend. And I also recommend that you be aware when you get checks that of that 15%, and maybe you throw that into a tax account, call it a savings account, whatever, but so that it's there, so that you're not surprised if you happen to make a lot of money one year in your self-employment business. You might have to come up with $4,000 or $5,000 in tax money. So I recommend that people withhold that and put that aside as well. And it's just something to be aware of. So so that is in the record keeping. That's how I usually recommend to people, especially when they're starting a business, that they put things in different in a separate account, so that there's no question. I've been looking for years for an accounting program that isn't more than I need. And when you start out, I'm sorry. Okay, what you really need when you start out is something fairly simple. And so what I have I've used Quicken. I've used QuickBooks is much more than I need. I don't need the program to write invoices or do any of that or pay bills or anything. So, but over the years, I've used a number, and I'm looking to see if I had my little list of names. But what I have found, and some of my clients have recently given me the heads up, is Microsoft, Google Sheets. And you can do a monthly budget, and then you can do reports, and it'll show that you keep everything on your sheets. You can make adjustments on the categories. So if your income is from the sale of paintings or I don't know, something else, you can categorize that. You don't have to use their categories. And it's working out really well. It's a nice, simple program. You put what your income is coming in, and then your expenses that going out attributed to your, and if you do that, if you do it, I would say weekly, and if you're not busy, then you don't need to do it every week. But the shorter the time frame, the better instead of leaving it until the end, going through all your receipts, a bag of receipts or whatever, or your statements for your account as your records. It's so much easier to do it in 10-minute spurts instead of sitting there for a half an hour going through everything. I know this is by personal experience. So, so I usually recommend that you start it as soon as, whenever, it's January 1st, and that way, or August 1st, I don't know. But yeah, so the Google Sheets, it seems to work really well. Any questions? Is that okay, so that's Schedule C, the self-employment tax. Are there any questions on the self-employment tax? The Internal Revenue Service, as much as they allow some people to get away with things, they've gotten much better because of computers and because of electronic filing in finding out things. As I said, if you're making sales and you're getting either 1099s, which you would get if you're in a therapy business as well, they get reported to the government. If people are giving you cash, well, then might not be any reporting, but you are required to report that information. I forget where I was going. If you're making lots of money during the year, and after the first year when you set up a business, they're fairly liberal about it. So it's okay. And if your income changes from one year to the next in a dramatic way, and you owe a lot of taxes, if you've paid in, let's say 3 years, you have a job and you've been paying the same taxes or getting refunds or whatever, you're paying enough. Let's say you have a spurt 1 year. As long as you've paid in what you paid the prior year, there's no penalty. But if you consistently say, oh, I don't know, $4,000 or $5,000 at the end of the tax year, and some of it's caused by your business, they will penalize you for underpayment of what they call estimated taxes. And of course, they'll charge you interest on the amount that you owed. So what we do as we're making more and more money is, a lot of my clients, even if they've started business, I will check in with them on a quarterly basis. They'll tell me how much they made that quarter and their expenses, and then we'll figure out approximately what they should send to the IRS. Because when you have withholding, it goes regularly. You're paying them on a regular, when you get paid. If you don't have withholding, they like you to pay them when you get paid. So, and that goes for capital gains as well. Let's say you owned Microsoft stock at $25 a share. It's now $349. You sell it and you have this huge profit. You should pay estimated taxes on that quarter. So, so if your income changes a lot, it's a good thing to figure out. So, okay. Questions on that? That's a little bit sort of in the weeds. I hate taxes, but I do them. Do them for people, and I like to keep people out of trouble. So that's good. So that's all right. Nobody likes taxes. I just had that conversation with one of my clients. Okay, so now, retirement savings. I'm going to say you guys are really young, and it's critically important, and you won't even think that until you're around 40 probably. That, oh my God, what was I doing? Well, you were living, you were, finding apartments. You're in the ages between 20 and maybe 30. You're moving out of home, you're getting out of school. Maybe you probably have college loans if you have those. You're buying things. You need, a couch, and you need a chair, and so you're consuming. So savings is not top on your list, but the earlier you start saving for your retirement, the better off you will be in the future. Retirement money is generally, now if you have a job and you have a paycheck and they offer a retirement account, put anything in it to begin with, anything at all, and then you can increase that as you get a raise or as time goes on, as you get your budget in order, because the sooner you start, that money builds, and it builds tax-free until you go to take it out later on, because it's pre-tax dollars. Even if it's $50 a paycheck, the best way to do it is to start when you're young and invested in maybe just a retirement savings account of some kind. That usually, if you have a plan, a 403b or a 401k or any other kind of retirement plan with a workplace, they'll have investment choices. So you can pick a time weighted account where you can invest it for, retirement year 2055 or whatever it is. So, okay. So I always recommend that people utilize their workplace retirement, because that's pre-tax dollars, comes right off your paycheck, and it is really painless. If you are in your own business and you're still getting a paycheck, you can also open up a retirement account. And remember when I said that profit amount, the net, you can invest money from that and get a deduction on your taxes as well. It gets a little bit complicated with the actual amounts and things, but you can find that out as well. The retirement simplified employee pension plan is a self-employed person's retirement plan, and it's just as good as a 401k or an IRA. Also, which you can deduct up to the amount that you make in addition, or it depends. There's all sorts of income levels and restrictions on retirement accounts, but you can find them out, and they will be, especially if you just inquire. If you go to a website like Fidelity, they're really good at giving calculators and showing you, well, okay, if I invest $100 every 2 weeks, for 10 years, what might I have in my savings account? So it's a good, so retirement savings are really important, and they're important to start thinking about. Okay. So, okay, so this is what I did. Oh, I did some math things with those calculators. At the age of 22, if you invested $50 a month until you were 62 years old, and sounds impossible, doesn't it? And you got a 5% return, you would have $74,780 in your savings. And that's just $50 a month. So okay, and if you and $50 a month would only be $600 a year. At age 22, if you invested $2,000 a year, which is $166 a month, you'd have $267,759 at the age of 62. Same time frame, from 22 to 62, or push it up a little bit. If you started at age 32 and you did that $2,000 a year, you'd have $148,165. See why I said it makes so much a difference? That 10 years of investing that same amount of money adds up, especially then. That's assuming a 5% a year return. It's a great it's a great thing to see, because it's very inspiring. And the S&P 500, which is an index, you probably have seen it on the news or whatever if you're interested in investing. It's an index of 500 of the largest companies in the United States. It's a US investment company, index. And their 10-year return is, so you can see that at 5%, what you would have. The 10-year return for the S&P 500 from 2011 to 2021 was 13.6%. So that's also a recommendation for investing. You can be conservative and do the 5%, because you can get that now in a bank account or in a IRA in a bank. But if you do take a little bit more risk and do the S&P 500, you can really magnify those investments. So that's just something to think about. That's the whole scope. If you and I like to recommend that people either go to a website that has an education portion, like Fidelity. I'm not as familiar with, say, Ally Bank or Charles Schwab. I'm trying to think of some of the other ones. Some of them are just for stocks and bonds, but if you want to educate yourself a little bit more, it's good to have those websites that are, or those investment companies that are scalable, that have been around for a long time, and that have educational programs for the investors. So, and I use Fidelity as an example. I don't have any connection with them. I technically, but they're a good company, and they seem to have a lot of good educational programs. So, okay, did I questions? Any questions, Quinn? I don't see Lily. She may have fallen off.
Sorry, I'm trying to get myself off of mute.
Oh, that's
no, I did do just like a quick, I'm old,
Lily's
Okay.
not here anymore, so I can which is terrifying. I'm just like, I've started way too late. So it is always scary to hear about the investing part because I'm just like late to the game, which is just, it
Well,
is what
that's
it is at this
okay.
point.
That's
Um,
okay. It's never too late.
it's not too late, but it's discouraging. So I think that I was, and I think you touched base on it a little bit more. And I think, like you said, I'll just do a little bit more investigating, because I do know for last tax season, you know, I used a lot of different, like if I did a market or if I, you know, I have a lot of different ways I get income. So they haven't, you know, sent me any kind of 1090 or anything. I forgot what it is.
1099. Yep.
For 1099 for being an independent contractor. I did have like one check that was like 1,700 that I did, you know, file
Okay.
for that I got paperwork on. But I think it was like Venmo and Square. They all gave us like another year before they start kind of, you know, figuring
Sending
out
out
like
the
who's making
reports.
money. Exactly.
Yeah.
Yeah. So
Yeah.
I think I only made like maybe $400 on Square, like a couple $100 there. So it was okay. But I do want to just kind of be mindful because I'm not super privy to things and the tax man just terrifies me. And if they ever say, and I'm not, unfortunately, they kind of like will just scare me into giving them money. So I'm not like well versed. If they say something's wrong, I'll just be like, fine.
Right.
But I do need to kind of just do some more research, and I'm just trying to figure out whether it be in the middle of this year, probably not, but more so next year if it's worth it to you said something in the beginning, not start an LLC, but kind of like get a tax number for
You
being
can
an
do,
artist.
okay, you can do, can be an independent contractor. I mean, you're sole proprietor is the
Okay.
okay. And especially for artists, nobody's going to sue you. So your liability, you don't necessarily, I mean, you can get insurance, but for whatever, but you don't have the liability of, you doing, what kind of art do you do?
Paintings.
Okay.
Usually,
So
yeah,
no one's
visual arts.
Right. Okay, so you can be a sole proprietor. If you want to get a tax ID number, you can do that right on the IRS .gov, and it'll say tax ID, and you just put in sole proprietor, and you give the name. If you have a separate name for your business, which you should register if you do, only if you're, just for Providence or wherever. Where you live in Pawtucket, is that what you said, or you're in Pawtucket?
Yes.
Okay.
Yeah.
So you would just put your address and you work out of your home, right?
I do.
Okay. All right. So and Pawtucket has the artists designation in the area, right? I mean, are you in that area of Pawtucket where they have the arts?
So, it was sort of, yeah.
Okay.
So I have, I'm in a mill building, and initially when I moved in, they kind of had they were looking for artists to fill the building.
Yep.
And also like a Pawtucket Arts Collaborative is here. We have a lot of businesses in the
Oh,
building
yeah.
and stuff like that. Yeah.
Okay, so I think you're in that zone. So you, as I said, you don't have any the income tax on any of your items. That's one of
Right.
they do. But okay, so you can get that, and the only reason to get a tax ID number for your business is so you don't have to give out your social security number. Now, if somebody's paying you for and you're not going through a gallery, but if somebody's paying you for a painting, they're not going to ask you for your social security number, but
right. Yeah.
but if you're, I don't know, maybe you're going to do a mural on the for the town, or something like that, you may want to have a tax ID number for your business.
And when you say register the name, is that separate as well?
Well, what do you have a name for your art?
I do.
business?
Yeah.
feel like I thought I did. Maybe I just started the process and kind of never finished it. But my
Okay.
business name is Olive the Giant. So it kind of like my art stuff is through that.
Yeah.
But I sign my paintings Quinn. Like if anybody like writes me a check, it would be to Quinn.
Okay.
Right now, because I don't have it, like I said earlier, I don't have it kind of like separate bank accounts or anything like that for it yet. So I
Right.
haven't
Right.
had
But you have to deposit.
anything under Olive the Giants other than my business name. Yeah.
Right. Right. Okay. And I only say that you might just call Pawtucket and see, because you don't want to have the same name as somebody else.
Mm-hmm.
And so you might just call them and say, do I have to register my business name? Find out.
Okay. Okay.
And that would be, and they may refer you to the Department of Business Regulation with the state. That's
Okay.
that's not as friendly a site as the Secretary of State's, but they may help you too. So that may be.
Okay.
All right. Okay, so those are all good things. That's great.
Awesome.
And it's not too late to start saving money.
No, I literally was just talking to my neighbor about this. I'm like, I don't care what it is. We're gonna have to like lock ourselves down for quarantine, take out cash, put it in an envelope. Like we have to do something.
Right.
But I do have, I just started a new job, so I'll probably roll that money from my other 401k. It wasn't a ton, but at least, I don't want to touch it.
Right.
And just roll it into something else. And I do have like, I just, like you said, I just have to do a lot more research, but I have like a couple of apps from another course that I took, and I have something called Acorns. So I give like them
Okay.
$5
Okay.
a week reoccurring, and I have it in some kind of like, I don't know, it probably gains like $1 or something. And I'm like,
it's
but
okay. It's a
yeah.
start. And
Yeah.
that 401k, the new job, do you have a retirement plan at your new job?
Not yet. I'll be
Oh.
doing it August 1st. So it's still new before I can like
Oh.
delve into all the benefits.
Okay, well, ask them. Okay, so when you start, ask if you can transfer the old one into your new workplace.
Yes.
Because otherwise you can roll it over into an IRA, but if you have a workplace one, adding to it, and if they add something, it might be a really good idea.
It might match it.
Yeah. Well, it'll match what you put in, and then that account will just grow. It'll be bigger. So
yeah.
and you won't lose it. It'll be one place. It'll be in one place. That's the other thing. So.
And for no problem. That's perfect. And then for the tax, if I do, so let's say I don't have to register my name and I get myself a tax ID. I'm filling out this Section C. Now I know it was like 10,000 or 14,000. I don't know. They changed it. The money, the dollar amount is irrelevant. For me investing in my own retirement, for my own business, how does that work? Is that something I'm just able to set up on my own, let's say through a different account?
Okay, so a retirement account specifically for your business?
Yeah, isn't that like, can't you kind of invest in your business, like have money taken out for my own retirement, for like have my business take out retirement?
Yeah.
Is that a thing?
It's not really a takeout thing. It would be, in other words, if you made $1,000 in your, on that Schedule C, say, your net, you could put you could take that 1,000 and put it into either an IRA. You could start with that, and that would be
okay.
an IRA. They have what they call it let's say you made 30,000 from your art. Okay, wouldn't that be wonderful, right?
That would be fantastic.
Right. And at that point, you could have what they call a simplified employee pension plan and put up to 25% of your net in there. So you could
Okay.
put 3 times 25% is $7,500 instead of just well, the IRAs are now 7,000, but you could put $7,500 even if you have a 401k for your work.
Right. Okay.
So that's the business retirement plan, which is separate from your 401k. And when you have a retirement plan, depending on your income levels, they might restrict you, but if you have your own business, you can put more in, or you can just start with putting it into an IRA and use, the $1,000, put the whole thing in, and then basically you're not going to be taxed on that,
Right.
because you get to deduct that $1,000, and there you go. So still have to pay the self-employment tax of 150, but sorry.
Just give that man some money. All right.
Right. Right. Well, and I have to say this because not only do I do taxes, so I'm basically an agent of the IRS. I hate to admit that, but when you go to collect Social Security, you will be very happy that you did that, because money you put in here 20 years from now, even 10 years from now, whatever it is, 10 years is worth more because you'll be getting more from it. So,
right.
And that's
I
where that self-employment tax goes directly to Social Security and Medicare for you. So
I feel like I learned in college circa 2003, by the time I was retiring, we weren't going to have that anymore. Hopefully we have kids to take care of us.
Yeah, that's
it's like, oh God.
Well,
that's another call.
Right. I'm a baby boomer. So I'm just happy to know now that there are more millennials than there are baby boomers. And it's the working people that pay for us. Now, the government can do whatever they're going to do, but I doubt whether they're going to take that away, because I think we would elect them out if they start talking about that. So I'm not sure, and this isn't a political discussion, but all I'm saying is that they're not, I doubt whether they'll get reelected if they say they're going to take away people's Social Security and Medicare. So, and that younger people have always thought that it's not going to be there by the time they get there, but it is. And it mostly is because there's like 80 million millennials, and they're the ones working and paying in, and then they just need more people behind them to pay as well. So it hopefully will continue to work. We have
thank you. That gives me a little bit of hope.
Okay. Yeah, I'm not. Political leanings, not leanings, but political parts of all of this really do affect your finances, because anything the government encourages us to do, they give you a deduction for mortgage interest. So they're encouraging you to buy a house. We do those things that, so encouraging and doing savings accounts and retirement accounts and IRAs are really, that's been encouraged for a long time from the government for us to save for ourselves. So that's a good thing. So, okay. And paying taxes is another thing that they encourage us to do. So, okay, I see Deborah has come on.
Hello.
Hi, I'm sorry, did you have trouble, or were you?
Yeah, no, I couldn't. I was talking to my cousin on the phone at like after 6, and then I was like, oh, I have to go do a Zoom, and then I couldn't find the link, and it was in my junk. I emailed Uriah and Sandy, and Sandy gave me Gabby's email, and then I'm finally here. So hopefully I'll get to see the video for the first part of.
Okay, yeah. I sort of talked about all the basics. Do you have, how come you took the class? We had Lily and Quinn I've talked to, but.
Why
what-
did I take the classes? I need help with finance.
Oh, okay, okay. Are
Yeah,
you
basic.
an artist?
Yeah, I'm an artist, and so I've kind of just started a new business right in COVID. A
Oh,
pet,
great.
yeah, pet portrait business. And I've worked in restaurants for very, very long time. So this is kind of the first time I have a part-time job, but I'm also trying to work on my business. So
And
I
what kind of business is it? What did you
Uh,
say?
pet portrait.
Oh, cool.
Yeah.
Okay. Okay.
And I do have a 401k from a previous restaurant, but
Mhm.
I do not add to it. I am in my late 50s, and that's all I'm gonna say, because this year is a big birthday. So yeah, I'm just not really good with money at all, so I just don't pay attention to it. So but
Okay.
that 401k is kind of just, sitting there and doing its thing on its own. So I actually have to address it because it's a little, I think I have to make, because of my age, I have to it's a little bit riskier, right? What I'm in right now. So, I mean, it's making me money, but at some point it's not, the risk is not going to be there. I mean, I don't want the risk.
We talk about 60-40 in my business, which is 60% stock and 40% fixed, basically, or bonds. So the more conservative type. Now we've had an incredibly, thanks to COVID, right? Outrageous, scary investment period because of COVID. I mean, so something that we've never seen before. It wasn't like the 2008, 9, and 10 downturn, which was caused by a whole different set of unregulated and risky investments that business was doing that shouldn't have been. But COVID was difficult, and we seem to have a really strong economy right now. Most people don't think that. Inflation has gone down to 3%. I haven't seen very many headlines on that, but and so interest rates will come down. And that's good for people buying things. We're back to flying if you can get off the ground, and it's not a weather issue as well. But we're back to traveling, we're back to working, and we're making things. So we have a 3.5% unemployment rate, which in my business, since I've been in business, I don't think we've ever seen. I think we used to say 4% was full employment. So it's good. It's actually really good. So the 60-40, and this is where I'm going, right? The 60-40 investment of stock, which is taking more risk versus the fixed, is probably still good for the next, if you're at your level, maybe 10 years.
Oh, okay.
So if you have approximately 10 years that you're not gonna fall off the cliff and stop working, then I would say that's still a good, could be a good combination.
Yeah.
The good thing is that on the fixed side right now, you can get 5% with very little risk. So doing bonds is good. This is a good time. And you might get more than that if the bonds are a little riskier, but as interest rates come down, if they come down, they'll come down a little bit. They won't go back to zero where they were for years, but they'll come down a little bit, and that'll increase the value of the fixed investments. So it'll be good for it. So you, and the stock market, God only knows. And I say that with, because I'm not sure anybody knows. But there are good companies. There's so much stuff going on, AI, virtual currencies are a big investment area, very risky. I don't advise people to do that unless, I don't know, they have a lot of risk money. And so companies are making money. The government seems to be on their side because taxes have been reduced for them. So that's always a good sign for the company. So hopefully, I don't know what'll happen. UPS looks like they're going to go on strike, which is not a good thing. That could be a little spinner that causes a problem because they move a lot of
Goods. Yeah.
goods. Yeah, a lot. So hopefully they'll get that settled before it actually happens. And okay, so you've got some time, and even if you just start saving a little bit, it'll help.
Like
It'll
a
help.
high interest savings account.
That would be great. Yep.
Yep.
Yep. Okay. All right. So you didn't hear the part about the business setting up a business account. I was talking about Google Sheets. Are you familiar with that, with them? Because that's really good for keeping track, in other words, of your income and then your expenses for your pet portrait business. So and the Schedule C, which is the one we talked about, is for its profit or loss from business. That's I think on here, but it'll be shown on the recording, and that's your income and your expenses for your business, and that's the reporting form for the your tax return. So we talked about paying taxes quarterly. If you have another job, so you have some withholding, but if you're making money, the government wants their money,
No.
anything, at quarterly. So okay, well, I'm glad you made it. And it was great. I don't really have anything else unless there's anything else that you want to ask me questions. Gabby, I don't know if you have any questions or anything you want me to expound upon.
I'll just go ahead and do a little question of my own, if that's okay.
Sure, absolutely.
When it comes to investing, and you weren't part of this part, Deborah, but part of the process that we were talking about in terms of investing and when to invest, Barbara had these really great statistics on, if you start at 22, if you start at 32 and invest X amount, what does that look like in 20 years? What does that, amount to? But I think investing can be such a broad term. And we've talked about a little bit like investing in stocks, getting certificates. Are there any good websites or like YouTube pages or books that we could look at to kind of disambiguate the different kinds of investment strategies out there?
Yes, and I don't well, okay, so I'll send you back to Fidelity, because Fidelity has calculators. They have educational programs, part of their websites about investing. I'm trying to think. Susie Orman on NPR. She does a variety of things. Her voice gets me. So I d- and she's helpful. There are lots of books on investing. There's basic books. Oh darn, I have books on budgeting, and I should have.
know-
Pardon me.
I'll just share. I know that a friend of mine has recommended a book called Your Money or Your Life. And it's this
Okay.
interesting kind of overview of how you're spending your time baseline and how you're investing your time, and kind of starting from that premise of, okay, if you spend X amount of time budgeting, this is how it helps you at the end of the year. So I'll throw that one out. And sorry to put you on the spot, Barbara. You totally don't have
That's
Um,
okay. I should create a list of
yeah, well, I only
resources. I
bring
should.
that up because, yeah, as part of the Assets for Arts program series, I'm also excited to get together a series of either websites or books or YouTube pages that the artists in our community that are able to download this recording can also follow along, and maybe download a spreadsheet that's a Google Sheets template for how to make a budget.
Okay.
It's a
I
book.
will do that. I'll do that for you. I'll send it to you. So
You're the best, Barbara.
okay. And also what I didn't mention to you guys was there is a Free Tax USA, which is a website that you can get your taxes done for free. So and I haven't visited that, but that was at one of our meetings. That was the last time I did this, somebody did mention it. So
Is there a limitation to income on that?
I don't know.
Okay.
But I know
Very
that
good to know.
the tax websites will say get your taxes done for free, but it's not really free.
It's not. TurboTax gets me every year for some reason. Federal tax is free, and then state is like $500. I'm like, great.
Oh, geez, yeah.
No,
Yeah,
it's not.
exactly.
It's probably like
No, I know.
like
It's even if
$100 and
it's
something dollars. Yeah.
right,
And I'm
right. And
just like,
that's
dang, got me again.
and everybody has to do electronic filing is really the easiest and best way. The IRS encourages it because they have warehouses filled blocks wide with just old tax returns. So when you do it digitally, they also can come back and ask you questions much faster. so but that's good. That's a good thing. And there's a lot of tax fraud and scams, so be careful. And if there's any problem or you think that anybody's gotten your information, you can get a PIN from the IRS. They'll send it to you for every year if your identity is hacked. But that will protect you. So, and they'll know it's you. I've had, in my business, I've had a number of people that have had their taxes hacked. And so they now get a PIN every year. So, okay. Okay, is that, that's it. I'm good. If anybody else wants to, I will put together a list of books and maybe websites that might be helpful.
Do we have any other questions for Barbara?
I have to watch the first part of the video, so.
Perfect.
Yeah.
Yes, we'll prepare the recording along with some resources that you can,
Great.
use alongside this. But yeah, if that's everything, let's thank Barbara for her wonderful time.
Yeah, thank you, Barbara.
Yes, thank you so much. This was super
Okay.
helpful.